Hi, I'm Anup, and I welcome you all to Blue Saffron, the podcast program of corporateshitak.com, sponsored by Jani Plastics. And you're about to receive knowledge on Indian and Australian GST, goods and service tax. Yeah, you got it right, mate. Let's get started, shall we? Valuation of supply in Indian GST system. Whether called valuation of supply or computation of tax or GST valuation, all in all, it's nothing but a calculation of tax for your tax invoice resulting from a trade of commerce. The idea is to add up the taxable amount, including all the taxable charges and other taxable fees, and then tax the total. But there are some rules. The rules are like payable amount refers to the price paid or payable by the recipient to the supplier for supply of goods or services, where the price is the sole consideration for the supply. No other thing, just the price. In addition to this, there's one more important rule for determining the transaction value after GST valuation is that the supplier and recipient are not related to each other. The definition of relation expands even beyond the family member. So the definition of relation goes like this. They are from the same family member, into the same business. Either they are controlled by each other or by a third person, or they are controlling a third person. Employer, that's also the relation. Legally recognized as partners, officers or directors of one another business, being into the business of one another, we're sole agent, sole distributor, or sole concessionaire to each other. So GST valuation cannot be carried out between two parties that are related like this. Let's understand the formula now. We know that item rate per unit, when you multiply that with the item quantity, what we get is the base price. So the base price is item rate multiplied by item quantity. Now, there are some inclusions. I'll come to that soon. Base price, when we add the inclusions to the base price and deduct the discount, what we get is the value of supply. So the value of supply is the base price plus inclusions minus discount. And when we calculate the GST on this value of supply and add to that, what we get is the valuation of supply. So the valuation of supply is the value of supply plus GST. Now, coming to the inclusions. Now, there are some incidental expenses like packing, loading, unloading, hamali, that's what they call in India, transportation charges. They become the part of the base price. So we got to add that. Then the taxes other than GST, all the other taxes, charges, fees, cesses, such as education cess, and other duties, for example, demerit or seen products like tobacco or tobacco products. There is excise duty applied at the source first and then the GST added on the top. So they all become part of the base price before calculation of the GST. Another inclusion is the interest and penalty. Now, when recipient breaches the payment terms and conditions with the supplier by making late payment, the supplier may recover the amount of interest by including it as a late fee or penalty in the invoice. So these are the inclusions that become part of the base price. What doesn't become the part of the base price is the discounts, if any. So discounting. Now, offering conditional discounts is a common practice in Indian trades of commerce. Discounts can be given at the time of supply or even later. In case it is at the time of supply, it's not to be included as a part of the value of supply. Thus, it's deducted before computing the GST. In case of later discount, the input tax credit can be reversed by the recipient. However, the mention of discount in the invoice at time of supply is mandatory. What I mean to say here is you need to mention it as the discount in the invoice first to give the discount later. Now, let me give you a actual computation with the figures. Now, I would ask you to pay a little attention here. Let's say the quantity of goods sold is 100 kilos and the rate is 288. So obviously the base price will become 28,800. And there are some packing charges like let's say 200, then 1,200 transportation charges, 150 is insurance charges. So you got to add all that up. And let's say there's a discount of 350, you got to minus that. So when you add all these inclusions and you deduct the discount of 350 on the 28,900, what you get is the 30,000 in total. Now you got to compute the tax. The 18% flat IGST applies when there is an interstate transaction, which is 5,400. If it is intrastate, within the state, then the same 18% gets divided into two halves. 9% GST, that is 2,700, goes to central GST, and 9%, 2,700, goes to the state GST. If it is Union Territory, then it goes to UT GST. So in total, the payable amount becomes 35,400. This is how you carry out the valuation of supply or computation of GST.
So, my dear listeners, I hope you enjoyed the audio. I also hope there was some takeaway for you. Signing off now. We'll come up with more interesting episodes. Till then, take good care of yourselves. Keep liking your one and only Blue Saffron. Cheers. Bye bye.